What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a flat Friday and we didn't get any more answers than what we already knew, but we are getting very close to some very critical breakout levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.08% and we're still seeing SPY getting rejected right around that resistance level at 390. And we did get the second day in a row closing back over our 20 simple moving average. So without a doubt, in the short term, we do have the higher low. We're just waiting for SPY to get that higher high with the breakout and close above about 393, which will also be our very critical resistance trend line. Above that, it's very likely the bulls are ready to battle the bears and go close that gap at 401, but there will be a very strong battle there because that is where the big bad bear is waiting. Remember, this is still a bear market and the bears will not just give up easily and will not just hand this market over to the bulls without a significant battle. So do expect very strong resistance just above in the event that SPY does get that bullish breakout. Now in the short term, if you're a bull, you're still using this risk level down here at 380 because if we lose that support at 380, we're very likely going to 370 or closing the gap at 369. And if we lose that support, we're very likely going to that price target for that next leg lower down there at 350. So you can be bullish as long as SPY is above 380, but you need to get a lot more cautious if we break below that support. And the next bull breakout will be the close above 393, which is our resistance trend line and our higher high. And once we get that higher low, higher high breakout, we will have a bull trend in SPY, which could mean that we've seen an end to the bear market, at least in the short term. I don't personally believe we've seen the bottom for the year or seen any kind of bottom for that matter, other than just a local bottom for a sustainable bear market relief rally before the next leg lower. So even if we get the bullish breakout, you always need to be managing your risk very tightly. In the NASDAQ 100 triple Qs, we were also flat today, only going up 0.13%. And intraday, we did see the triple Qs trying to break out above that previous high at 296.58, but we did not close above that resistance. And as you can tell, the big bad bear is waiting just above, right at that gap close and the 50 EMA around 299 to 300. So the triple Qs have significant resistance just above at 299 and 300. So if the bulls can break that resistance, the bears will retreat to the previous high of resistance right around 315. So you're getting a lot more bullish if we can get daily closes above 297 and 300. And your risk level for being bullish is down here right around 287 to 285. If at any point we lose support right around the 287 to 285 zone, you will want to look for that next leg lower down there to retest the low at 269 and the price target at 258. And do keep in mind the Bollinger Bands are getting very tight and they're getting very squeezed, which means the next leg in the market is likely going to be very volatile and we should see a very large move coming after this Bollinger Band squeeze. So risk levels for bulls is down here at 287 and risk levels for the bears is up here right around 300. So it will be the bullish breakout above 300 and the bearish breakdown down below about 285. In the Dow Jones, we were down 0.16% with the Dow Jones getting back over that resistance at 311 for the second day in a row, but still below the resistance trend line right around 317 to 318. Above the resistance trend line breakout, we will have the gap to fill at 323. And that will be the bullish breakout, which will mean we're likely going to see the Dow Jones testing the previous daily high at 333. And there will be a lot of bears waiting at all of this resistance because we are still in the bear market. If the Dow Jones loses support at 311, look for a retest of this low right around 306 and then the retest of the previous low at 297. And if we break to a new low, the next price target will be down there at 285. So you can stay bullish above 311 and as a bear in the Dow Jones, your risk level is right around 319 to 323. On the Russell 2000 IWM ETF, we were extremely flat today, only going down 0.01% and we did get the second day in a row closing above 175, but did not break out to a new daily high. So as you can tell, a lot of these indices look like they could be double topping right at resistance. So we will need confirmation of that bullish breakout above the previous daily high. And remember, there will be bears waiting at all of this resistance because all of these markets are in downtrends and they're all in a bear market. Your risk level for IWM is 175 and 170 because if we lose that support, we're coming back down to 164 or making the next leg lower at 156. And the bull breakout will be above about 178 and the resistance trend line right around 181 and will very likely fill that gap just below 184. On the ARKK ETF, we were up 0.06%, and ARKK is continuing to bounce its head against that resistance at $47 and cannot close above that level, which is no surprise because ARKK is in a bear market and there are going to be bears at resistance. The bull breakout will be 2 consecutive closes above 47, and then we'll very likely have this inverse head and shoulders play out, which should take ARKK into the 50s. However, until we get that bullish breakout, expect strong resistance here, which could send ARKK back down to support at 42, or to retest the low at 36.5, and the next leg lower below support will be at 33.7. On the VIX, we were down about 5.45% as we did get a VIX crush Friday, and the VIX did close below our support trend line and coming back down to this support right around 24. As you can tell from this chart, the VIX has been bouncing off of that support zone right around 24 to 26 all year long. So we will get a bullish breakout in the VIX if the VIX does close below 24. So you will want to be watching that very closely. Otherwise, the bears could likely use 24 as a support zone for the VIX to bounce back up and spike the VIX back above 30 for that volatile bear market leg lower. So you're getting more bullish if the VIX closes below 24 and more bearish if the VIX closes above 30. On Bitcoin, we're currently up about 1%, and Bitcoin is getting very close to getting that daily close above 22,000, which could send it all the way back up to retest resistance at 25,000. And if we break above 25,000, look for a retest of resistance at 28,000. If this is just a false breakout, look for Bitcoin to come back down to retest support at 19,000. And if support fails at 19,000, the next price target is all the way down there at $12,000. But so far, this does look like it is going to be a bullish breakout. So if this breakout look holds, look for Bitcoin to start running back up to about 25,000. On NVDA stock, we were down 0.13% as NVIDIA did get rejected from the resistance trendline in that resistance zone right around 161, but we are still looking relatively bullish as long as we are above 150, but there is going to be very strong resistance at 161, so the next bull breakout will be the close over 161. There is a gap to fill to the downside right around 153, and if we lose support at 150, look for a retest of the low at 141 with the next valid price targets at 130 and 125. If we get the bull breakout above 161, look for strong resistance at 177 and the gap close right around 181. On Tesla stock, we were up 2.54% as Tesla is continuing that bounce above $700 and coming all the way back up to resistance at the 50 EMA, which is right around 752. If Tesla can get this bullish breakout from this consolidation wedge, we will likely have very strong resistance just above at 775, but above 775, this will look like a bull market building up in Tesla stock, which does mean we could come all the way back up to about $900, but we will have resistance on the way there right around 828. So you're getting a lot more bullish in Tesla if we get back over the 50 EMA and can close above resistance at 775. On Apple stock, we were up 0.47% as we continue to see Apple leading the way higher with the second day in a row closing back over the 50 EMA, and we're getting very close to testing that resistance zone at 150. Above 150, Apple will be looking a lot more bullish, and it's still possible we do some type of inverse head and shoulders around that neckline at 150. So look for very strong resistance at 150, which means if Apple breaks above 150, you're getting a lot more bullish, but you should be a lot more bullish on Apple as long as it's above about 141 to 142. If Apple loses this breakout look, and this looks like a false breakout, we should lose support right around 142, come back down to 137, break below that, and close the gap at 133. But right now, everything is looking bullish in Apple, and we do have a very clear breakout look with the higher low and the higher high. So everything still looks bullish in Apple at this time. On the financial sector, we were down 0.22% as the financial sector is back over 3 of our 4 moving averages for the second day in a row, starting to build up a bull trend, which means we could try to make a run to go close that gap at 33.7. Critical support is just below at 30.8 with that 20 simple moving average right around 31.7. The industrial sector was down 0.45%, also looking a lot like the financial sector, building up and consolidating around 3 of our 4 moving averages. So you will want to watch that very tight support level right around $88, because if we lose that, we have a gap to fill to the downside. But if we hold this look and we break out, we have 2 gaps to fill to the upside. The healthcare sector was up 0.3% today, getting very close to breaking out above that resistance at 131. So we will need to close above 131 to get to the neckline right around 134. Overall, this still looks like a bullish breakout, and we are slowly developing the bull trend. So the healthcare sector is looking bullish as long as it's above 129. The energy sector was down 0.04%, holding that support right around $70, but still in the bear trend. If you're going long on the energy sector, you need to hold your risk level right here at $70, because if we break below that, we could be going for that next leg lower. So jumping back over the S&P 500, in the short term, the bulls do look like they're starting to take control of this market, but you cannot forget that we do not yet have the higher high on the daily chart, which is required to develop that bull trend. And the bears are just above at some very critical resistance that they are not going to just give up without a very strong fight. So just keep it in mind that this is still a bear market and this is still a downtrend, and the bears are just above at critical resistance. So this is not the time to be getting overly bullish. You're going to have plenty of time to react if we do get the bull trend and we do reverse the bear market. So don't get FOMO, just have a plan, know your risk levels, be patient, and use great risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.